Hey everyone, thanks for tuning into today's episode. We are officially back, and I think I have to admit, I have not been sufficiently bullish. I've been quite bearish in my projections as to where I think this particular cycle is going, but I think I might be wrong. We have hit a new all-time high prior to the halving, and that's never happened. Congratulations to everybody who's now in the green, who's hodled through it all, and no doubt that was a challenging experience, but I can speak from my own experience. It was one where I've learned a lot, I've grown a lot, and I think, as they say, you learn more in bear markets than bull markets. I think it's now just the time to keep our head on a swivel, don't play around with things like leverage, and just stay humble and stack sats. Well, do your best to stay humble, but at the very least, just stack sats, and let's keep going. And it was against this bullish backdrop that I had an awesome conversation with Joe Consorti. He's an analyst at the Bitcoin Layer. He's also an advisor at Theya Bitcoin. And we spoke about all things macro, US economy, and Bitcoin. We got into fiscal and monetary policy, the current state of the US consumer, as well as the US economy, the real economy versus the stock market, and some of Joe's thoughts around that. We then got into Bitcoin, the current state of the market relative to 3 or 4 years ago, how we were looking, some of the more optimistic metrics that Joe keeps an eye on. And then the Bitcoin ETFs, of course, we had to talk about those and how they were comparing relative to gold ETFs when they were launched in 2003 or 2004. Overall, really informative, fun conversation. I hope you get a lot of value from it. I certainly did. And as always, would appreciate your feedback. Enjoy the show. Cheers, friends.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There is no second best crypto asset.
Hello, friends, and welcome to the Why Bitcoin Show. I'm your host, Dale Warburton. It's a weekly podcast on why Bitcoin matters and what makes it completely different to all other cryptocurrencies. If you're interested in Bitcoin and you'd like to distill crypto fact from fiction, you've come to the right place.
All right, it is March 5th. Bitcoin has crossed 68,000 US, and I'm very pleased to introduce my next guest, Joe. Joe, welcome to the Why Bitcoin Show.
Thank you so much for having me, man. I'm very, very excited to get started.
Brilliant. Yeah, Joe, we have got so much to talk about. I mean, I found myself this morning walking around singing creeds. Can you take me higher? Hate that song, but it seems to be the anthem for this particular cycle. We're definitely going to jump into price action and everything that's been happening. I mean, Bitcoin is up more or less like 50% in a month. But I usually like to kind of zoom out first. It's nice to sort of have a look from a kind of, as the Americans would tend to say, a 10,000-foot view. So perhaps if you could just let's just talk fiscal and monetary policy and just, what is the lay of the land as far as you're concerned when it comes to what's happening stateside? Because I've said it many times on the show, sort of the US is the kind of the tail that wags the global economic dog, as it were.
For sure. Well, starting things off on the fiscal front, the United States is now adding roughly $1 trillion worth of debt every single month. Now, this is a problem for several reasons, but it's not a problem that's going to slow down. There's too much that goes into the fiscal spending pie in order to actually cut spending. And nobody worth their salt in Congress who wants to get reelected will vote to either cut spending or raise taxes. We have Social Security, we have Medicare, we have military spending. No congressperson or senator would ever try to put forward a measure, a bill, whatever, a proposal to cut spending or to reduce taxes, because that would mean that either your Medicare, your pension, all these things you've been paying for, that gets cut, or you have to pay more, and nobody gets reelected off of that, certainly. And so, a return to austerity is not going to happen at all. And so that means the fiscal train is, slowly moving. It continues to derail and move off the tracks. And we're on pace right now where we're adding roughly $1 trillion in debt, like every 90 days. I think I said 30, I meant 90. The debt right now is $35 trillion. I can't even remember. And the interest expense crossed $1 trillion in Q4 for the first time ever. The annual interest expense, wow. $1 trillion. 2 years ago, it was sub 400 billion, I believe. And so we're really in a point where the Fed having raised rates to where it is, and this is kind of the monetary side of things, it is basically, it's causing these interest payments on the United States Treasury's outstanding debt to be so much higher. It has caused this huge balloon from 300 some odd billion dollars each year, which still is a hugely exorbitant sum of money to be paying in just interest on your debt. But also it's caused it to move from that to over $1 trillion. And in doing so, it kind of means, okay, the United States is in a position where we already are issuing such an obscene amount of debt. Now the interest on that debt is over $1 trillion. How are we going to pay for it? Well, the Fed has to start monetizing it. The Fed has to step back in to the US Treasury market and begin buying treasuries once again, either directly from the Fed, which they already do. It doesn't have any impact on yields per se, but the Fed already plays an active role in treasury market liquidity via something called an add-on, which is something at the end of an auction, treasury auctions. Prior to the auction, they pledge to buy a certain amount of US Treasuries. And so the Fed already supports the treasury market in some way, but right now, buyers are more interested in high beta risk assets. They're more interested in things like Bitcoin, things like trade, like high beta risk assets. They're more interested in the stock market, in NVIDIA. And the appetite for US Treasuries is always there. People need these things on their balance sheet. But the reality is right now, given how risk is performing, the appetite certainly isn't there for the heavy issuance schedule of US Treasuries. And the issuance schedule of US Treasuries is going to pick up even more as we continue moving throughout the months in 2024. And so higher issuance of these treasuries, the need for the United States to fund itself, otherwise the government shuts down. I'd love for that to happen, God forbid. But for a prolonged period, it doesn't happen very often. It's not like they're going to fix this problem by cutting spending or raising taxes. And so the fiscal deficit is just going to continue getting wider and wider and wider. The amount that we spend going to be much greater than the amount that we're actually producing. And so as a function of that, the Fed is going to need to take an increased role in the US Treasury market. That's my view. They're going to need to ramp up their buying, buy actively from the US Treasury, even maybe buy actively from banks, which means that, frankly, the risk-taking party is only going to continue. The Fed, and this is the last thing I'll say, the Fed kind of has a shadow mandate. So the Fed has two mandates. Everybody knows: full employment and price stability. Now, obviously, those are both contradictory, the way that the Fed conducts monetary policy. Prices become too high when there's maximum employment, and so they raise rates to rein in prices, and then they cause a recession as a result of that and hurt employment, and then so on and so forth. And that's what central planning gets you. The Fed has kind of a third mandate, which is financial stability, and kind of a mandate that happens as a result of that, and that's no recession. And so those are the mandates that the Fed really works under. When push comes to shove, the Fed will intervene and it will inject liquidity into these markets. We saw it last year via the creation of new facilities. And I have a feeling, in order for proper market functioning to happen, US Treasury market is the largest single asset market in the entire world. It is the most in-demand form of collateral in the entire world. We live in a global credit-based system. If liquidity in the Treasury market gets threatened at all because the issuance schedule is just too much for the buy side, the Fed is going to pick up that slack, and it's going to do it by printing money out of thin air in order to just simplify the mechanism in order to buy it. And so that's where I feel we're headed as we head into 2024. Yeah, no, I'll stop there.
Yeah, I think that's a great assessment. And I think something that we were chatting about just before we hit record was it's also an election year. So, whenever politicians didn't have an incentive to certainly rein in spending, it is especially now when, I guess, political office is up for grabs, so to speak. I suppose the next question kind of that follows on from that is the narrative has been, at least emanating from the White House, that the economy is doing quite well. We've got full employment, and that actually the Fed has been very successful in taming inflation. However, there are other signs, as you've highlighted in several tweets and some articles, that all is not necessarily well with the American consumer or the American economy at large. I wonder if you can just talk to us about whether or not you think the US economy is currently looking kind of strong. Is it weak? Are we going to hit a soft landing? Have we hit it? Is there a hard landing on the horizon? Kind of what's that sort of picture like in your mind?
For sure. So prices are 20% higher than they were 4 years ago. If you just extrapolate what the consumer price index was on an absolute level this time 2020, which was like around the 250 level, and then you bring it forward to now where the CPI index is at 300, that is 20% higher prices in 4 years. That's completely untenable for the majority of Americans, many of whom wages have simply not kept up with that. The reality is wages haven't kept up with CPI, and most prices have risen far and away above that 20% growth that has happened to the overall CPI index over the last 4 years. The CPI itself is a horrendous, oft manipulated, oft changed indicator for where the price level is in the economy. Realistically, most prices have doubled in the last 4 years, and wages may have risen 30, 40, even 50%, but they're not keeping up. People are cutting back. The consumer sentiment survey that goes out by the University of Michigan that took a downturn last week. Consumers surveyed worse with their current sentiment toward the economy. They surveyed worse with their forward outlook over 1 year for the economy, and they surveyed that they believe price inflation is going to stay at the exact same level over the next year. And so the White House can use all the propaganda that it would like to. At the end of the day, the stock market is not the real economy, especially when fewer and fewer people each year, because wages are not keeping up with prices, can't afford to fund a 401k. What use does a 5,100 point S&P 500 index matter to a guy that doesn't even have a retirement account? He doesn't own any assets. It doesn't matter to him. If the stock market's booming, it matters to people who own assets. And so ultimately, like, these misnomers, this deliberate conflation between asset prices and the economy is just a huge scrambling effort to garner political points in any way that they can, trying to convince people who are mostly economically illiterate, who aren't really paying attention to everything around them, that if they see a news chyron that says the economy is booming, they'll believe it. Doesn't matter that much to them. Maybe they're middle class, upper middle class, I'd say upper middle class, and these price increases, sure, they hit their wallet, but they certainly don't hit their wallet as badly as somebody who's middle class and below. And so really that's what the White House's whole game is here, is propaganda. That's all they have left. I said this a couple months ago, all they have left is propaganda. And it's never been more true now. Everybody knows that wages aren't keeping up with prices, but regular adjustments to the CPI index to make it seem like prices aren't going up as much as they are, which also feed into the real wage calculation, which make it seem like real wages are actually growing. Real wages, of course, wages adjusted for inflation. Real wages are actually growing in order to convince the layman who might not be actually experiencing this as badly as other people. They believe that the economy is doing extremely well. And then those are also the people who run the news media outlets. They push these exact same headlines. And it couldn't be further from the truth. At the end of the day, the normal man, the majority of America, does not own any assets. It's a fact that their biggest asset they don't even own, which is their home. And for them, this isn't a booming economy. It's not a booming economy at all.
Yeah. 100%. I was listening to Spaces yesterday, and there was some commentary on the fact that the Fed and Treasury seem to be so incredibly disconnected from the sort of median person, just normal people. It's just the noise coming out of both sides is just remarkable, and it's kind of gaslighting writ large as far as I'm concerned, because when I, even here in Australia, when I sort of think, okay, what's happened here, over the last 4 years? Well, house prices are 40 to 45% up in most instances. There's been a pullback in some cases, but that's pretty much across the board, at least where I live. So it's become 40 or 45% harder for people to buy a home now. Rentals have gone through the roof similarly. I can't think of a single line item in my shopping basket that has gone up by less than double digits. And yet they will continue to peddle the message that it's 5%, it's 6%, whatever the case may be. I got an assessment from my insurance company on my car 2 days ago, 18% increase on my premiums. I'm like, what the hell's just happened here? And my car's less valuable 12 months later. So what are we doing? So yeah, it's quite unbelievable. But as to your point earlier, there seem to be so few people that are economically literate and who are, I guess, if I were to give them the benefit of the doubt, it is that they've got other things going on in their life, and they are just normal people who are just trying to get by, and they tend to believe what people tell them. and they tended to believe all the messaging in 2020 around how dangerous the flu was. And the same thing's happening today about the economy. So yeah, I have huge sympathy for them, and the complete opposite for those pushing the message. But yeah, it is interesting what you say, and it does seem to be the case, not just in the States, as you point out, but I think it's the story of a lot of the West, quite, frankly. It's an exciting day. I think we're knocking on all-time highs. As I said, we're recording this March 5th. By the time this comes out, we could well be north of the previous all-time high. And yes, it's in nominal terms. It's not quite in real terms, but still, we'll take the win. A lot of this, folks have been attributing, obviously, to these ETFs. And I think it's almost impossible for us to have a conversation about, this recent price action without talking about these ETF inflows. So, I'd love to get your take, obviously, not only on the significance of the ETFs, the inflows you've seen to date, the success of the ETFs, but just some general thoughts around that. And, yeah, feel free to run.
For sure. Yeah, well, I mean, there are a couple of things going on here. Right now, Bitcoin at $69,000 is on much stronger footing than the last time we were at $69,000 in 2021. Basically, in 2021, the futures market was totally dominated by a lot of leverage, and it was leveraged to the downside. And so when the market moved against them just marginally, when the price dropped, that caused these huge liquidation cascades. And so really aggressive selling that pushed other long positions into selling their positions and closing them out. And it created huge cascades, like this big domino effect to the downside. Now, not only is there a lot less leverage baked into the market, which means more spot buying, which is good. I mean, it fundamentally makes for a more stable market and much higher likelihood that we'll sit at these levels for a very, very, very long time. And in the future, these will act as lows rather than levels that we can fall underneath again. But this time around, the market is dominated by short sellers. There are a lot of people who are shorting Bitcoin, which is good, because that means instead of these liquidation cascades, when the market moves against the shorts, then they have to buy Bitcoin to close out their positions. And so not only is there less leverage, it means for a more stable Bitcoin price, but also any huge leverage purges that we will get will be lopsided to the upside. So it will cause buying pressure instead of outsized selling pressure. So that's kind of where we are now. And no, in terms of overall market structure, it's very, very positive. There are people right now who are taking profits. Some long-term holders are selling and taking profits. Bitcoin's realized price, which is basically the average price at which all the Bitcoin on the network last moved, it's moving up. And the only time that it moves up is when people are selling into a bull market. When Bitcoin's price is moving higher and this realized price is moving higher, it means that people are moving their coins at an increasingly higher and higher price, which means that some of the people who've been holding on to Bitcoin, probably people who bought a large portion of which I would imagine bought near the top last time, are getting out now. But there is a bit of that shuffle going on. And I imagine at this level, that shuffle will continue a little bit until all the people who have been waiting to sell at this level are contented, they've sold, and then we can move higher. But overall, more broadly speaking, I'm much more confident about this market structure from the leverage side of things, the fact that it's dominated mostly by spot buying. There are far fewer Bitcoin on exchanges this time around. We've dropped from around like 16% of outstanding Bitcoin on exchanges to only 11%. And so increasing Bitcoin's supply inelasticity, all very good things today compared to where we were in 2021 when we were last at this price.
Yeah, that's incredible. And, I suppose one of the markers that I've said is when I get calls from people asking me about Bitcoin. And there was also a moment in the last cycle when a friend of mine's grandmother was keen to ape in at around 69,000. And that's when I knew, okay, I think we've hit the top. This didn't obviously stop me from thinking we'd hit 100K, which again, never happened. And I think it's become quite well established that SBF was largely responsible for that sort of fake pump in November. But yeah, it does look right now as the setup is just so much more compelling. And if you just want to use things like kind of news coverage anecdotally, I just had a squiz today at like what's happening online here in Australia. We crossed over 100,000 Aussie dollaroos, as some people would call them, or Pacific pesos, as others have said. But yeah,
convict dollars is another one I saw today on Twitter. Convict dollars.
There we go. Yes, yes. I think that was from Danny Knowles. But yeah, like, you know, there's nothing about it in the news. Like, I haven't seen a single peep. And you would imagine that at least sort of 100K represents a fairly, like, it's quite a significant hurdle, like a benchmark. Like,
Psychological level for
yeah,
sure.
psychological. That's the word I was looking for, Joe. Yeah, 100%. So it's like you'd imagine it's now crossed into mainstream consciousness. Well, alas, no. We care more about Taylor Swift and the latest Married at First Sight episode and the drama and the sex scenes and God knows what else. So I'm like, okay, it's still very, very, very early. Relative to gold, how are we doing and where do you see this now going? Because I think, look, from what I understand, these ETFs have been a roaring success, even though there were articles coming out within days saying, oh, you know, this illustrates Bitcoin's, you know, on the path towards being captured and this and that. I wonder what your thoughts are around like how Bitcoin is going to compete with these gold ETFs, whether you think there are outflows from the gold ETFs into Bitcoin, when we might be able to see Bitcoin cross the gold ETFs, and yeah, any commentary around those thoughts?
For sure. Well, if you just line up the dates that the gold ETF was launched, well, gold's first ETFs were launched back in 2000, around 2002, 2003. So if you line up the exact dates that the first gold ETF was launched in Australia, funnily enough, obviously speaking to you in Australia right now,
Yeah.
to when Bitcoin's suite of spot ETFs were first launched, and you just line them up with one another. Obviously, Bitcoin's growth has been way more precipitous than gold's. If you just line the two up, you have, relative to gold's price today, you have $350,000 Bitcoin hit relatively easily, just using what the ETFs for gold did to gold's price. Obviously, it opened up the floodgates for institutional investors to allocate to gold just for price exposure and then having the firm buy gold on their behalf. And so there's huge demand for that. Obviously, Bitcoin as an asset, you always want to hold your own Bitcoin and use it as an asset as it was intended, right? If they're not your keys, they're not your Bitcoin. You
Yeah.
want to hold your own keys. But there's a huge cohort who doesn't care about that at all. They just see that, oh my goodness, Bitcoin year to date, it brings my portfolio Sharpe ratio up above 2.5. It brings my year-to-date returns more than double the highest performing stock market sector in the United States. I want to buy some of that, and my money is locked up in my brokerage account or my tax-deferred savings account or my retirement account. I want to allocate to that. And so huge demand for people who are just looking to get in from a price appreciation standpoint. And from that perspective, looking at lining up these two dates, lining up these two assets, gold's ETFs launch, Bitcoin's ETF launch, looking at gold's price appreciation since its ETF launch, it was a huge boon for gold's price. If you just line the two up, line the days up that both assets' respective ETF suites launched, Bitcoin clears $350,000 very easily. And of course, that's in a much shorter time frame in my purview than it took gold to reach its prices following its ETF launch, purely because you don't have the paper gold problem that you do with Bitcoin. And also, I mentioned inelasticity. Bitcoin is perfectly price inelastic. When we talk about economics, you know, as the demand for gold goes up massively, people buy gold, price of gold goes up, and the supply schedule of gold rises too to meet that new demand. And then all of a sudden, that acts as a headwind for the price. Whereas with Bitcoin, you can't change the supply schedule. It's completely inelastic. It's completely price inelastic to any changes in demand. And so with that in mind, it's an entirely new ballgame. This thing is absolutely scarce. Obviously, gold is relatively scarce, but we can increase the supply schedule when there's more demand, and that pushes price down. That acts as a headwind on price. Same can't be said for Bitcoin. And so for that reason, I think Bitcoin is going to breach these percentage gains way faster than we saw gold do with its ETF launch, for sure. And particularly as the other side of that equation heats up and gets worse, the U.S. fiscal situation and the monetary situation get worse, and the Fed is increasingly forced to monetize the U.S. Treasury's debt in order to meet our funding obligations and fund this ever widening deficit that we have here in the U.S. If we want to keep the economic machine churning, we want to keep the fiscal deficit. We want to keep our fiscal spending funded. We want to keep this deficit funded so the government spends money into the economy and doesn't cause a recession. And to remain attractive on a world stage, then the Fed is going to have to step in and monetize some of that, which means Bitcoin becomes all the more attractive because money gets printed out of thin air. Bitcoin is the very thing, obviously, apart from asset seizure, Bitcoin is the very thing that was invented to solve this problem that we're currently living through. And that's why you see it exploding so high in price.
Yeah. And sort of just touching on that, I mean, one of the things I've been most impressed by is obviously since inception, Bitcoin has operated largely in a very kind of easy money environment characterized by QE. But we have seen Bitcoin perform incredibly strongly in an environment that you would say is characterized by high interest rates. And in some ways, that suggests that it's decoupling from sort of many of the the risk assets and that was the narrative of 2021 that I think people latched onto. They say, yeah, I mean, it's a Tesla on steroids, basically. It's just a sort of high beta tech stock. And now I think what we're starting to see more and more is that it's almost like being seen as risk off, and it's almost like one of the only functioning alarms left in the global economy that is incapable of, I guess, being manipulated. It's sort of it is one of the truth tellers out there. And I know that here we are today, March 5th, and gold is quote unquote ripping. It's 3% up, I believe, and so is silver. So as Larry Lepard has said, perhaps we are starting to begin to see people embracing Gresham's law. In terms of these ETFs flows as well, Joe, I mean, as I understand, we're just kind of knocking on like 50 million under management now across all the ETFs, and I think gold is at 92. So based on this trajectory and the sort of commentary you're providing, I'm sort of, I'm just thinking now that it's not inconceivable that within 2 or 3 months, we'll see that Bitcoin ETFs will have more under management than gold, which is wild to consider, given the fact that gold ETFs have been around, I think, since 2004 or something like that.
Yeah, 2003, 2004. It's so let's see here. So collective holdings of gold ETFs fell by well, meanwhile, total AUM lost 2%, arriving at 200. Okay, so 210 billion for all gold ETFs. That's fascinating. I thought it would be way more. Well, I actually have all of it up in front of me. Let me pull up the total AUM of every single Bitcoin ETF combined. Well, okay, so 50.2 billion. We're already a quarter of the way there.
That's we go.
Crazy.
Wow. Right. Okay, so my figures are off, but that makes sense. It's crazy to think. And and Bitcoin is digital gold. It's just but one of the many different narratives. And so I think that's quite fascinating in itself. And I suppose one of the things that I've thought about, and people have spoken to me about, one of them obviously being Peter Dunworth, I know you had a chat with him recently, was that this money coming into these ETFs, it's different to the money that came into Bitcoin, as you highlighted earlier, characterized by, I think, a lot of kind of leverage, a lot of crypto hedge funds. Peter Dunworth has said this is sticky money in the sense that this money's not going anywhere. Do you subscribe to that notion? Do you reckon that people are going to be sort of, rotating out and collecting profits, rebalancing quarterly or whatever the case may be? Or do you think they'll say this is almost like credit default insurance on, sovereign currencies, and I'm just going to hold?
Well, that remains to be seen, because looking at correlations, Bitcoin is still very much considered like a high beta stock index, basically. If you take a look at, the correlation between Bitcoin and the NASDAQ, Bitcoin and the S&P 500, it's extremely close. Bitcoin, of course, the hallmark of Bitcoin is because of its lower liquidity, it has much higher beta, right? So it has much higher sensitivity to overall market moves. But Bitcoin is still not considered a risk-off asset. If we're looking at the monetary properties, of course it is. But if we are, because of what it was designed to hedge against. But if we are looking at how it is traded, it is still treated like that risk asset. I believe that when times do get tough, when we start seeing a recession and a more substantial flight to quality, and in that sense, we're usually talking about people bidding up US treasuries, which hasn't happened because rates are still at, let me pull a couple screens. Yeah, rates are still hovering around like 4.5 across the curve is the average, 5.5 in the 1 month, 4.30 on the 30 year. So this huge risk off bid hasn't happened yet. When it happens, we'll see how Bitcoin behaves. Will it behave like a tech stock and sell off precipitously as fund managers sprint for the exits? Or will we see Bitcoin steady out and prevail? I have a feeling that we just surpassed the market cap of gold, excuse me, silver, if I'm not mistaken.
Mm.
Gold is roughly 10 times higher than where we are now. So gold is like 14 and a half trillion dollars. Bitcoin just surpassed 1.3. I think as we start surpassing the market cap of things like gold, as it becomes a really, really huge Goliath asset and it stops being really high beta, really high sensitivity, then I think it'll start behaving the way that its monetary properties suggest that it should, which is this risk-off asset, apex quality, buy this thing during bad times. But by the same token, you see gold kind of behaving like that as well right now. So gold is going up along with all the other risk assets. So who knows? Maybe that shift in correlation is underway, but it does remain to be seen. I think the true period that this will really be tested are when we see a recession, we see that huge flight to quality. It's going to be key to observe how Bitcoin behaves to kind of use as a signpost for where we are in Bitcoin's maturation as an asset.
Great point. Yeah, totally. Okay, that makes sense. So there might be some signs of a decoupling, but for the most part, TLDR in your perspective, it's pretty
Yes.
much still like highly correlated with other high risk things like, stock indices and things like that. And that's where a lot of people appear to be parking their wealth, at least for the time being. It is interesting because you would imagine that gold performs well in certain environments relative to stocks. I remember reading Ray Dalio's book about, you want to make sure that you've got a bunch of kind of uncorrelated assets, and gold is always supposed to be kind of uncorrelated. And so maybe it's a question of time horizon, but it seems as if, a lot of these assets are kind of just moving upwards. The only thing people don't want to be sitting in is probably, I guess, is just pure cash at this point, because it looks as if stock indices are going to be a much better bet. I suppose one of the things I've seen, and maybe you know this, maybe you don't, I've heard people repeatedly say, okay, so these ETFs go live in Jan. There are some people who've been sitting, waiting and going, oh, I can't wait. This is exciting. And to your point earlier, they don't care about self-sovereignty. It's like, I just want price exposure for my clients. There's like a whole cohort, as I've been led to believe, listening to various podcasts, that are necessarily having to wait for a period of like 90 days to elapse for this product to be available for them to purchase. I don't know if that's some sort of regulatory requirement in some instances for certain participants. I don't know if you've got any insight on that particular point.
I know that's the case for Merrill Lynch, I think. I believe they're waiting for that window to pass, but apart from, the really tertiary knowledge, I don't know too much about that.
Okay. Yeah.
But the reality is that a lot of people do not have access to the ETFs yet. That is a huge reality. A lot of these people, like you said, there is some kind of window that they need to wait for it to pass in order to begin offering it to their clients. And as the days go by and they see Bitcoin's continued outperformance, you can bet that demand that is there is already ramping up for sure. But again, apart from the tertiary knowledge, I'm not too sure. But you can expect it to be a huge boon to Bitcoin's price, of course.
Totally. And I think what's happened in the last week in particular with Vanguard CEO stepping down is particularly interesting. We can speculate as to what the reasons might be, but Vanguard were of course very clear about the fact that they're not going to be enabling their clients to buy any of these Bitcoin ETFs, even though, as far as I understand, they have a bunch of like strange leveraged ETFs that are out there. And so it's like going, well, how are you protecting your clients? But anyway, that is something that kind of remains to be seen. What are your insights when it comes to the RIAs, these sort of registered investment advisors, and their appetite for getting involved? Do you think they've arrived? What's your general feel for, I guess, that cohort?
For sure. I mean, at the end of the day, like any investment advisor that is not that advises a 0% allocation to Bitcoin, at the end of the day, they're going to get fired sooner rather than later. Like these people will look you dead in the face and say that, it's NVIDIA is a buy, ride the AI boom, when they're at like a 50, a 60, a 70x price to earnings ratio. So at the same time, they're saying, I want to protect my clients. I want to be a proper, upright, gentlemanly investor, tie my tie every morning, get into work, shine my shoes. But then they're not offering the best performing asset over the last decade over any time frame. You invest in Bitcoin at any point over the last decade and you're up. You're up. You're not just up minorly, you're up majorly. And this notion that Bitcoin is this infantile, volatile asset that just crashes and does nothing, it's nonsense. If you've wanted to preserve your wealth, you would be holding it in literally nothing other than Bitcoin over the last decade. If any RIA worth their salt will begin either turning around to this or going out of business, because you can bet that people are seeing it in the news. They're hearing about it. Their kids are investing in it. They're seeing what its price is doing. They're hearing more positive headlines about it. It went from thieves' money to drug dealers' money to only small countries use it. And now ultimately it's coming around. You have Goldman Sachs doing analysis that it is the best performing asset on an absolute basis and on a risk adjusted basis, not just year to date, but over the last several years. So I think if RIAs aren't warming up to it, they'll have to. They'll have to. I mean, it's inevitable. The only other scenario is fiscal austerity, is fiscal and monetary austerity, where we go, wait a second, pump the brakes. Let's stop forcing everybody into debt that they don't need. Let's allow people to own their homes. Hey, why don't we stop charging compounding interest on literally everything? And, while we're at it, let's stop measuring GDP by how much people spend. Let's consider economic growth holistically rather than just making sure people buy stuff all the time, regardless of the quality. That's never going to happen. That would need to happen for Bitcoin to become totally worthless. But at the end of the day, as long as there is a monetary order that seeks to debase above all else in order to incentivize spending up, if you don't spend today, your money's going to be worth less, then Bitcoin will always have value. And because their reins of power completely rely on the money printer, they're never going to stop doing what they're doing. And so as long as that will continue happening, Bitcoin will continue rising in value, which means that, these RIAs have to come around to the reality that it's a new investing world and people want to actually hold what preserves their wealth. That's what investing or passive investment has always meant. And so to not offer that to your clients is going against your fiduciary duty.
Yeah. 100%. And well said, because, I wrote a few years ago about how eventually it'd be a career of risk not to talk about Bitcoin, not to know about Bitcoin. Maybe you don't have to necessarily endorse it, but you need to have an informed view. And it seems to have happened a lot quicker than I expected, in the sense that with these ETFs now, I think that any responsible fiduciary has to have a view and has to be an informed one. It can't just be it's used by criminals or bad for the environment. I just think that there are sort of the exits are slowly closing in terms of the excuses to not at least dedicate some time to understanding it. And I would have far more respect for these guys if they just said, look, I don't understand it, than to, just talk about all the typical, it's the tulips, or it's, it's bad for the environment, or governments will ban it. And
because people forget that tulip mania lasted, I think, less than a year or 2 years. It was a very truncated period of time. Bitcoin's been
never
around
bounced back,
going on 15 years. Bitcoin has had a market price for almost 15 years.
Exactly. I think that's what drives me mad, is like, tulips went up, went absolutely mental, and then never came back. Whereas Bitcoin has demonstrated, if you look at the log chart, time and time again, sort of higher lows and higher highs. It's the best performing asset. I was having a look the other day, 6 of the last 8 years. And I've been fiddling around with a tool called the Nakamoto portfolio recently, just to see kind of what the small allocation can make. Because I really want to try and get some folks I know who are on tiny positions to say, come, we got to up your allocation, because you're missing out on the fastest horse in the race. And these are the kind of the reasons. And you don't have to go huge. You don't even have to go huge. A 5 or 10% allocation can have a massive impact on your overall returns and on a risk adjusted basis, to your point earlier. So yeah, it's going to be interesting. And the last thing I'll say is that so many people who are, I guess, even retail folks who are naysayers or doubters today will inevitably hold Bitcoin in their pension funds or superannuation funds, as we call them here in Australia. They're just not going to know it. They're going to hold them indirectly. Like, Franklin Templeton have a product, I believe it's one of their balanced products, where they'll have a tiny allocation to Bitcoin, like say 1 or 2% within a whole basket of other things. So you'll own some Bitcoin, you just won't have a clue about it. And that's just going to be the way the world works. And I guess those that sort of resist are going to become increasingly less relevant, as are potentially these active asset managers who've been charging, 1 or 1.5 points for perhaps not even outperforming the S&P, let alone something like Bitcoin. Sort of, Joe, a couple other things I wanted to touch on, aside from these ETFs and whatnot, was the whole notion of this crypto, because some people reckon that this 2021 bull run was really peak crypto.
with all these monkey JPEGs and all that silliness. And we might see a silly season, or in fact, we're likely to see one, but it might not reach the highs of that period. It's not going to capture the public's imagination to that extent. I wonder if you've got a view on crypto in this particular cycle, and then, what your message is in general to, I guess, friends or family who somehow conflate Bitcoin and crypto.
I'd caution people from conflating the two. I certainly share your opinion in that regard, right? They're two entirely different things. Bitcoin is an absolutely scarce asset with a completely immutable ledger and an immutable set of characteristics, right? The properties of this monetary asset cannot be changed throughout time. It allows for ownership of your assets entirely. It is the world's first fully digital bearer asset, and it is the world's first absolutely scarce asset as a result of this rule set enshrined in Bitcoin's code being set in stone and enforced by hundreds of thousands. We know of tens of thousands, but hundreds of thousands, realistically, computers all across the globe. And so in order for Bitcoin to be disabled, you would have to have all of the governments around the world coordinate in secret to shut down the world's computers, all of the world's computers instantaneously. They'd have to shut off the internet. And then even then, you'd still be able to send and receive Bitcoin, and node runners would eventually get things back online. And so Bitcoin is a wholly unique asset. It represents absolute scarcity. Crypto, just like, during the .com boom, hundreds of different affinity scams is what they are, trying to sort of ride the coattails of this monetary revolution, right? We have an instrument that allows the individual to insulate themselves from endless monetary debasement and this runaway fiscal spending problem that isn't going to get any better as the Ponzi scheme that is Social Security just continues to get worse and worse. We're stealing from future generations at the expense of today, and the way that people can insulate themselves from it at an individual level is through Bitcoin. And that in and of itself is revolutionary enough for there to be hundreds, if not thousands, of leeches trying to benefit from that. But each and every single one of them has a company behind it that has a balance sheet, and it has somebody who's trying to take advantage of you. Bitcoin doesn't have a marketing department. That's the key distinguishing factor. Bitcoin, like gold, is a commodity. It's an asset. Anybody can go and mine it. Anybody can go and produce it. They can try their hand at allocating capital to produce it efficiently and cost effectively. Whereas every single one of these other coins, they're nothing more than a security. They're issued by a central entity. They're like a stock with a very thin veneer of Bitcoin-esque characteristics in order to fool people into buying them. They're not the same thing. Bitcoin is absolute scarcity. Crypto is not. You saw during 2021, 2, and 3, what happened to all of these entities that were peddling this stuff. All of them exploded. Most of the founders went to prison. And the only one that is alive today is Bitcoin. And that's because they're not the same thing whatsoever. Crypto is nothing more than an affinity scam. When I write and I say the word crypto, I put it in air quotes. Yeah. And when I'm talking about Bitcoin, of course, talking about the only asset that is absolutely scarce in the known universe, right? So these two things aren't even remotely the same. And at every single turn, I try to distinguish between the two.
Yeah, absolutely. Samson Mao has says Bitcoin is crypto and the rest are just unregistered securities. And that's kind of the starting point. Just conscious of time here, Joe, I've got one sort of other area I'd love to just touch on is the collaborative custody you guys do there at Theya. Relatively new product that's come out. Perhaps you can just talk to us just at a high level, the model, how it operates, what the fees might be, etc. I had a download. I've yet to connect my cold card to it just to have a quick fiddle and see how it works. But it feels kind of Casa-esque without the shitcoinery.
That's a good way of putting it. Yeah, I mean, Theya is relatively new, but we're really changing the game when it comes to Bitcoin self-custody. Our whole mantra is your key is your Bitcoin, and that is the whole idea revolving around why Theya exists. You're never going to get somebody who's on the fence about Bitcoin to take it seriously and take self-custody seriously. You need a front-to-back, end-to-end, fully guided experience that's totally accessible from your phone, and you could set up within minutes. And really, before Theya, there wasn't a simple Bitcoin only way of doing that. There wasn't a hassle-free Bitcoin only way of doing that. Now there is. Theya offers multi-sig vaults, right? So it's a 2 of 3 multi-sig vault that require 2 key approvals for transactions. Of course, that hugely bolsters the security of your Bitcoin. And Theya also allows you to delegate custody of any of your keys to a family member, a financial advisor, etc. And of course, we offer round-the-clock support in order to change that, fine-tune access, who can control these things. And also we support sovereign vault recovery, right? And assisted recovery options for your Bitcoin. So if you're on the fence, if you're scared about something like this, estate planning, what if you pass away? All of these things are totally handled through Theya, and the Theya app is an extremely easy interface to get through it all. Right now, we just added integrations for Trezor, for Cold Card, for Ledger, of course, Bitcoin only, but we have way more support for more hardware on the way. We have an Android app that's coming very, very soon. We're really all steam ahead when it comes to the development of this thing, because at the end of the day, we want to democratize self-custody. We want to enable Bitcoin to be used the way it was intended to be used. And that starts with simplifying self-custody. And that's what we're doing over at Theya.
One of the things I've said is I look at myself as a bit of an idiot consumer in many ways, because I don't really find tech that exciting or interesting in some ways. I just want to use it. I want it to work. And so it's got to look nice. It's got to be slick. My first experience with the multi-sig was Casa, because it was the only one around, and it was, as far as I was concerned, idiot proof for the most part. And then they sort of went down the shitcoinery path, and then I actually got disillusioned and said, okay, I'm going to go set up my own multi-sig. Rolled my own seeds, did the whole story through Seed Signer. Now, it's a hard sell for the average person. Like, they don't want to do that. That's a lot of work. And
exactly. Well, the reason Apple succeeded is not because it's the most functional machine. It's one of the least functional machines. It's because it's pretty, it works. The UI above all else, the user interface, the experience matters above all else. That's what we're trying to bring to Bitcoin. And there are a few other companies I love for the same reason. Foundation, they are excellent when it comes to their hardware wallet. I love my Cold Card, but I'm never going to give that to grandma under her Christmas tree and she'll know how to use it. And the same way you can give grandma a foundation and it looks like a phone, she knows how to use it, you can hand Theya. I won't say you could hand the Theya app to a baby and they'll know what to do, but one step above a baby, you could hand it to a toddler. The importance of Bitcoin and bringing Bitcoin into the 21st century such that BlackRock isn't the sole entity that owns all of your Bitcoin through this ETF vehicle is making sure that means exist for people to use Bitcoin the way it was intended to be used without jumping through hoops. Because it's very easy, just like you said, to lose people's attention, for people to become disinterested if there isn't a clear, easy user interface. And that's why I'm so stoked about Theya and what we're doing, because that's what we're doing. We're making it easy for you to self-custody your Bitcoin and manage your Bitcoin, because God knows that the majority of people will be happy leaving their Bitcoin with BlackRock and buying just an ETF vehicle, or leaving them on Coinbase instead of having to set up a Sparrow wallet on their computer and then connecting it to their Cold Card as a signing device. You lose most people after the third or fourth word, and their eyes glaze over and they no longer care.
Yeah, you're so right. You're so right. And the funny thing is, all the people who I'm an advisor to with regards to custody, I've just kept on ushering them along the journey that I've ushered them, and the glazed looks and the challenges they experience, because it's just like, it all comes down to the UI, the UX, and it's just idiot proof. And the reality is, a lot of these people are also not putting their entire life savings into it, so it doesn't have to be sort of air gapped, roll your own seeds, everything like that. It's like, this is a small slice of what they have, and it's just got to be as secure and easy to use as possible. So yeah, stoked to see that you guys have, I saw actually that when that was released a little while ago, and look forward to seeing the product evolve. Joe, you've been very generous with your time. Really appreciate your insights, man. And it's an awesome day in Bitcoin, knocking on all-time high. And did you want to give the audience a handoff to where they could find you and the work that you do?
For sure. Yeah. Thanks for having me on, man. This was an awesome conversation. Love to be back sometime. You could find me on X at Joe Consorti, JoeConsorti. And you could also find my work over at The Bitcoin Layer, which is a publication I run with Nick Bhatia, the author of Layered Money and professor of Bitcoin and fixed income over at the University of Southern California. You can just search on Google The Bitcoin Layer, Layer. And you can also find my more recent work. I've started doing some work on markets research over with the team at Theya, like we just discussed. You could search on Google Theya Bitcoin, or go to @Theya.us on that's the website. So type in Theya.us, check it out, and also download it for free on the App Store. Take a look. I think you will really love it. And if you've been on the fence about self-custody, not selling anything to you that I don't use or I don't advocate for, because this is a cool app. You should check it out.
Awesome. Yeah, I had a look, and so far so good. Just got to connect the old cold card, but it was idiot-proof thus far. Awesome, Joe. Awesome chatting to you, and we'll certainly look forward to chatting to you again. Let's do this once Bitcoin crosses over 100K. Let's say that.
Let's do it.
All right, sweet, man. Awesome. Have a good one. Thanks a lot.
Thanks for listening to today's episode. I hope you enjoyed the conversation and that you got some value out of it. Either way, hit me up on Twitter and let me know what you think. My handle is Dale21M. If you've got any suggestions as to people you think I should be talking to or topics I should address too, I would love that sort of feedback. Otherwise, if you want to support the show, there's a couple different ways you can do that. The first is just to share it amongst your friends and family. The more that people hear the message that Bitcoin and crypto are not the same thing, the better. And I want to help people understand that. The second thing you can do is give me a 5-star review on whichever podcast app you're using. Of course, that's only if I deserve it. And last but not least, if you want to stream sats my way via the Fountain app, I'm not going to say no, but it's not expected. Thank you so much for your support thus far. It means the world to me. I appreciate the hell out of you, and the best is yet to come. Much love, friends. I'll see you on the other side.